All right, good morning, gang. Welcome back to the Tier 1 Trading New York Live Trading Room. How's everyone doing today? Can you hear, voice, see screen? Let me know. Let me know. Perfect, 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 perfect. Happy Thursday to you. Thursdays that feel like Fridays. Excited to be back. We've been having a lot of really good conversations lately that have been cool to have. Lots of conversations on rules-based trading, lots of conversations on trading plan. I love yesterday's conversation on the 3-bar reversal idea. Got the mind tingling a little bit. Good morning, Trading View and YouTube as well. And excited to come into here today and wrap up our week. Got a few things happening on the economic calendar today, so we'll head over there before hopping into our pair. We've got jobs, our normal Thursday jobs, unemployment claims coming out for the dollar. Again, keep in mind when you look at the markets this week that it is a non-farm week. Non-farms will be tomorrow. Again, although non-farms doesn't have the same impact that it used to have back when I first started trading, the market would go crazy, absolutely nuts every Friday, every first Friday of the month. It has mellowed out a little bit, and that changes over time depending on its importance. But it is kind of a main state fundamental event in the market, so you do want to be aware of that. The markets still tend to not want to show their hands too much ahead of that event. So typically on non-farm weeks, especially as we get closer to the day, you see a lot of consolidation because no one really wants to act before that happens. Now, I mentioned this earlier in the week. What's interesting about this week as well is not just non-farm week, but our non-farm comes on April 1st, April Fool's Day. All right, today is the last day of March. So the last day of the month, also the last day of a quarter, which is always a little bit interesting. So keep an eye on the market for any type of funny business that may happen before the close. We got Canadian GDP and PCE coming out at 8:30 as well. So for today's trade of the day, we are going to start on a pair that I like but don't trade. Speaking of which, I shared this earlier I had a discussion with some new traders. We were talking about this yesterday before I guess, the transition from pair 1 to pair 2. How about that euro yen, man? Back to back to back. Pretty cool here. Awesome. So let's go to euro pound, right? We call this the molasses pair. It is a pair I don't trade. It is an extremely slow pair from a technical standpoint, at least how I trade. And different pairs are going to have different personalities, and different pairs are going to act differently and be better or worse depending on what your personal trading style is. But this one, price action, the way I like to trade it, works pretty well on this. It just moves extremely slow, so I don't look at it too much. By the way, for you guys on TradingView and YouTube, if you look in the link below your video, we got a cool workshop coming up soon. So make sure you sign up for that. It's going to be the biggest one we've ever done. Should be a link below, both on TradingView and YouTube if you want to check that out. Good morning, Chris. So what we have here on euro pound, it may have changed a little bit since I did my analysis. Keep in mind, I do my analysis anywhere between 5:30 and 6:30 each morning. So there's about an hour gap between that and when we kick off these sessions. But price action was trading above a previous structure high. We were still at a level of structure, right? And this is how euro pound is going to be. It's kind of choppy and sloppy. You can see looking left, we were at a previous level of structure, but there was room to move higher. I thought we can see a continuation up to maybe 85.36s. I don't know. What do you guys think? Real quick. Kimani says, hey, Akil, can you please show us how to read and use ATR for stops on TradingView? Sure. So first thing you got to do is you got to put your ATR indicator up, your average true range. Take a little bit of a detour. My ATR indicator is down here in the bottom left. It's green. It's invisible because I don't actually need to see it. I don't read it for only the number matters for me. So I don't need to see the actual indicator. But you can have it up if you want. So that number will tell you what the ATR is if you just hover over the most recent candle or whatever candle you want to know the ATR of. It will show it to you. You can see it down there. If you also want, you can bring over your data box here on TradingView and it'll show you the number in there, right? Once you have your ATR, then it all comes down to how do you want to use it for stops. So for example, if your rule for stop loss says, I want to get a half of an ATR above the previous structure high, then wherever your trade is at, you would find that previous structure high, that point, and then you would look at your ATR. Because your rules say half ATR, you would whoosh, slice it in half, Fruit Ninja style, and then put your stop loss that amount beyond that level of structure. So let's say if you have an ATR that says 20, and your rule is, hey, I want my ATR, I want the stops to be above this red candle, and I want it to be a half ATR, half of 20, whoosh, is 10. So then your stop loss would go 10 pips above that candle. So nice and easy. I tell you what, the ATR, it's funny. My buddy Stephen Burns also often asks these questions on Twitter. Where he'll be like, if you had to choose one indicator in your trading, and this is a cool question for you guys too, if you want to chime in. If you had to choose one indicator in your trading, what would it be? And I always think about it. I don't use that many indicators, right? But for me, it would be the ATR. For me, it would be the ATR. How about for you guys? If you had to choose one, there's no wrong or right answer. For me, it would be the ATR just because of how I use it in stop losses. And stop losses are very important to me. The RSI is important, yeah. Volume could be important, yeah. I don't really use anything else, but if I had to choose one, it would be that. I feel like I use that the most. It's involved in every single one of my trades versus any other indicator. How about you guys? If you had to choose one indicator, you can only use one, what would it be? Again, there's no wrong or right answer. It's just a cool discussion. Kind of, if you think about it, it kind of also makes you think about what's important to you, which is something we always talk about in trading, is finding what's important and kind of basing your trading philosophy around that. Even if you're building mechanical systems where you're using multiple indicators for multiple reasons, like entries, exits, filters, there's usually a core indicator that is telling you the main thing, and then the rest are like supporting actors. They're supporting it. RSI says Tobias. Ronaldo says RSI. Oliver says EMA. That's a tricky question, right? So whenever you get that question, does that mean you can just choose one EMA? Would two EMAs count as two indicators? Is that one indicator? How does that work? That's an interesting one. Because I think there's a big difference between if you're allowed to have two EMAs versus one. Yeah, I don't know. I'm just that person that makes these questions more difficult. Brian says volume profile. Billy says RSI. But yeah, I think risk management is more important. So you can take it from another perspective as well, where, I mean, so let's say you have the RSI, and I don't know, see, darn you, come on, you getting us down this path. VWAP, there we go. Let's say you have the RSI and an ATR like weighted evenly, right? Let's say like you value them both, or the same. If that was the case, then like now it comes down to which indicator is more easily replicated manually. I can't do the RSI manually. I can't do a VWAP manually. I can do an ATR manually. So you also have that to think about too. Like if this was actually a situation where you're forced to choose one, maybe I would take the RSI because I can calculate the ATR pretty easily manually. Or the RSI, oof, no way. But we don't need to have these discussions because we have the luxury of using as many indicators as we want. But always fun to talk about that type of stuff. All right, so let's get back to the prediction. I think Orsi and Bobby typed in. They're looking at the same area as I'm going to have to scroll back a little bit because I got off track, which is very easy for me. I think sometimes you guys do that on purpose. Sometimes you guys just say stuff and place side bets on whether I'm going to get off track or not. And you know I will get off track. And now I can't find hello. EMA. All right. I don't even know where those predictions are at. But we were looking at predicting where we think price action can go next. Again, we are in a period of consolidation, right? A zone right here. And our job is to kind of predict where in that zone, if we can continue higher, where in that zone we're likely to continue to. And again, we can do the same thing. This is very similar to really how we break down every price chart. But for you guys that tuned in yesterday, also very similar to what we did with Ethereum. Ronaldo says, might be a false breakout. Yes. Yep. Might not. I see your might be a false breakout, and I raise you a might not. So now we're at a stalemate. So how can we determine this, Ronaldo? That's my favorite comeback. Keel might be a false breakout, might not be a false breakout. One easy way to tell if it's a false breakout. And I shouldn't even say that's a bad word, bad phrasing, not easy way to tell. Easy way to tell based off of your rules, because you can always have a market can always go up and just go back down, and it doesn't do anything to tell you that it's a false breakout, and it just goes back down because the market can do whatever it wants. But if you have a rule that says, hey, I define a false breakout by an immediate engulfing candle after the breakout candle, then you will know at the end of the day. You will know at the end of the day. So this brings up another important point as well. Yep, wait for the close, right? Now, depending on your trading style, we've had a few traders here talk about higher time frame and lower time frame trading. You may not have the luxury. I shouldn't say luxury. You may decide that you don't need to wait for the close. So if we go down to a 4-hour time frame, right, there's going to be a trading opportunity potentially, depending on how price action continues to move. You may be in a situation where you can enter on a 4-hour time frame or a 1-hour time frame now. So here's the magical question. How do you handle this situation where you've got a break and close above previous structure here on your daily? That's your confirming candle. You're going to have a pullback, right? As you can tell right here, because we know this is the low of the candle. You're going to have a pullback on a lower time frame, which may offer a continuation opportunity. But in your head, you're also thinking that, hey, we may have a false breakout. I'm glad you brought that up, because this is a very important point. What do you do? And this is a great example of the reality of trading, because emotions are at the forefront of trading. And depending on what we want to do, we are going to either listen or ignore those emotions. So like if Chris really wants to get long, he is intent on getting long. He listened to some news pundit this morning talk about being long, and he's like, this is what I want to do. How do you think that potential false breakout affects Chris? Does he fear it or does he ignore it? He probably ignores it, right? Because he wants to get long. So he's like, nope. Not worried about it. Now let's take Ronaldo for an example, and let's say it's the opposite. Let's say Ronaldo watched a different news outlet and the pundits are saying you got to sell Euro pound. Now all of a sudden, how is this potential for a false breakout affecting Ronaldo? Well, now it's a fear of getting in. I don't really want to get in because I think it's going to be a false breakout. So a lot of the time, we're going to be affected. Well, I mean, we shouldn't be this way, but as newer traders, we run the risk of being affected by kind of like a negative confirmation bias. And I say a negative confirmation bias because a confirmation bias could be a positive thing if it's done for the right reasons, but a negative confirmation bias where we have an idea of what we want to do and we're only focusing on the things that allow us to do what we want to do. It's like when you're in an argument and instead of listening to the other person's side of the story, you're just kind of thinking of more excuses of ways for you to win the argument. And a lot of it is fear-based. So there's one way to handle this, right? there's one way to handle and control these emotions and not kind of be pushed one way or the other by emotional decisions, right? What is that one way? Have a trade plan? Yes, but more importantly, what in that trade plan is going to give us an answer? Or what the understanding of what? The understanding of the technicals. If we have rules for what we define as, hey, if this happens, then it's a false breakout, or if this happens, then it's a violation of structure, then we're no longer in a position, if we're disciplined in following our trading plan, we're no longer in a position where we're like, oh man, this might be a false breakout, so I don't want to get involved. The question that Bobby will ask you is like, well, is it a false breakout or not? Yes or no? If it is, then it means this. If it's not, then it means that. So in a situation like this, where let's say we're fearing, hey, this could be a false breakout, the question I would ask, is it a false breakout yet? Because it could always be a false breakout. Anything could always be a false breakout. Is it a false breakout right now? Based on the information that we have in front of us with the technicals? No. So until our technicals, our chart tells us that this is a false breakout, we should not fear, we should not sacrifice a valid trading idea on fear of a potential false breakout, because we just don't know. Like, what if it's not a false breakout? What if this is a retracement? It comes right into our buy area and then it pops up and gives you all the profits in the world, but you missed out on the trade because you were fearful that was a false breakout. That's going to suck. Now, will there be times where you take the trade and then the trade loses and then you look back on the daily and it ended up being a false breakout? Yes. And that sucks too. But that's trading. So it's good to have those ideas like, hey, this could be a false breakout, but until it is, until we've been given any evidence of that on a price chart, we can't let it dictate our trading decisions. Does that make sense, guys? Here's your $1,000 lesson for today. And it's not easy because, again, fear, we're gonna look at anything and be fearful, and even more so when you're involved in a trade. If you're involved in a trade and things start moving against you, you get all the wild thoughts in the world. Oh, your thoughts get crazy. Oh, it's going to be this. Oh, I knew it's going to happen. Oh, this is this, right? It elevates everything by that much when you're actually in a trade. But all we have to rely on, if we're going to be chartists, if we're going to be technical analysts, all we have to rely on is the evidence that the chart tells us. And the evidence that the chart tells us, that provides us our edge. Those are our probabilities. We have to trust and believe that we're doing something for a certain reason. And if we see a certain signal, then we should take a certain action. And if we see maybe a different signal, maybe we take another action. We talked about the graceful exit yesterday with the 3-bar reversal strategy. Maybe you're involved in a trade. If you end up getting the false breakout and for some reason you're not stopped out on your lower time frame, then that eliminates your initial trade plan. Maybe you cut the trade at market. You can put in those contingency plans. So really good question. I know there was some back and forth on definitions of false breakouts here in the chat. I think that was a conversation between you and Orsi. If you guys want to revisit that, let me know. But I didn't really pay attention to it. So let's take a look at this. Again, we can bring in our volume profile. Let's just take a look at, see if there's any spot that stands out in these most recent swings, right? You can see a little dull where we're at right now. It starts to pick up a little bit higher right up here around 85.22s. I don't know if we have any Fibonacci love up there as well. 886 a little higher. Looks like we're not going to get a lot of Fibonacci love. Let's do this. Let's measure out a 1-to-1 measured move. Swing low to swing high. Copy and paste. It's going to put us right at our 886. Let's take Fibonacci extension from that same move. Swing low. Let's try it again. Click on the button to keel. Swing low to swing high and back down. 127 a little bit lower. So we're all over the place. Not a lot of confirmation here with any added indicators. So for me, I'm just gonna, and I trust structure. That's the backbone of my philosophy. I'm gonna trust my eye on structure and project an 85.34 level here. So that's our top-down analysis. Top-down analysis is simply getting the lay of the land, asking ourselves, what has the market done? What is the market doing? What direction are we likely to go in? If we go in that direction, where are we likely to go to? Again, asking ourselves, is there opportunities to take a trade higher or lower, depending on what we're looking at? Once you're going to have that idea of what we're looking at, right? We get that confirmation bias. We dial down on our intended direction. Then we can hop down to a lower time frame, your trading time frame, and ask ourselves, is there a way I can get involved? So we're going to go down on the 4 hour here. I'm going to adjust well, I'll keep that line up there. We're going to take this line right here and put a note on our previous level of structure. One right there, one right there. You can see this secondary level is a pretty decent level. How do we know that? Well, price action leaves clues. You can see that we went up, really blew right past it the first time around. Came down to retest it, reject it, and went higher. Now we're right back at this level. So the thing that I'm looking for right here, we're going to end up going down one more time frame for me personally, but is a hold at that level. This is our decision point. If we can hold this level, this will offer an opportunity for a buy higher. Again, either multiple levels you can choose. You can choose an inside level right here if you're really conservative. You can choose a retest of the highs. You can shoot for an extension. You can break it down and fall three. Doesn't really matter, but a move higher. And then vice versa, if you want to plan for the opposite, if we violate this level, and more specifically would be this level right here, this is the sneaky one that's going to be a little bit more important, then does that offer an opportunity to the downside? And if we go down to the downside, where are we likely to go to? So trading opportunities in both directions. That's why I call it a decision point. Based on how price action reacts at this level, hold or violation, that's going to dictate how we want to approach the trade. Real quick, I got some questions on YouTube. I've been ignoring you guys. Sorry about that. I close my eyes sometimes when I'm ranting, but give me a second to cough and I'll get back to you. It's funny, I was talking to Jason yesterday during the trader coffee break. We did a really good one on how much should you risk? Make sure you check it out if you haven't already. But we're doing the coffee break, and he's on this great epic rant. And at the same time, right, he's having this conversation on Skype about our upcoming workshop. And I'm like, how is this dude typing and how is this dude typing and talking at the same time? And he's just like, I developed the skill over time. I can go on these rants. I have this like outer body experience where I'm just ranting and ranting and ranting while I'm having this full-blown conversation somewhere else. And I'm like, I do the same thing, but I just close my eyes and leave. I can't multitask. I can't do anything else. So I'll rant and I'll close my eyes and I'll like leave my body for a little bit and then come back and forgot what I was talking about. But I've attempted to do other things. Like I've attempted to like input trades. You guys see it. I try to put like trades into the pro trade log while I'm talking to you guys. And then like it works for a little bit. And then the biggest problem, I told Jason this after the show, I'm like, the problem is I can't spell. So like as soon as I make a typo, it's like a pattern interrupt. It slaps me back to reality. So I'll be on an epic rant and I'll be typing and I'll spell like instead of potential, potential or something like that. And then it's just like, I'm done after that. So I'm learning. I aspire to be where Jason's at, but it was amazing. I'm like, I'm like, he's ranting and we're just like writing paragraphs into our Skype chat. It's crazy. But going back to YouTube, if you use the daily time frame for prediction and maybe 4 hour as a trading time frame, then I think you can trade the pullback. Have rules for each time frame. Makes sense. How do you draw a volume profile? I draw it from the different swings in the market. So swing high to swing low, depending on what area or what range, I should say, I want to take a look at. So if I want to take a look at the volume profile of this current range right here, this swing, I would take it from swing low to swing high, just from the low of the range, right, to the high of this range, as long as I'm capturing this whole range. And that'll give me a good idea. Look at that. Nailed it. So good question. So let's go down one more time frame to the hourly. And I think there's another. How do you define a decent move to the downside? What do you mean by decent? Also, price must be at some major or minor structure in this case, if a false breakout happens, that would confirm a major level of structure. No. So I guess we'll start up one thing. What do you mean by define? What do you mean by define a decent move to the downside? What do you mean by decent? Is there something specific you're looking at with decent, or and we can get to the other structure level a little. Price must be at some major or minor structure. In this case, the false breakout happens, that would confirm. It wouldn't confirm a major level of structure. It would just be a false breakout. Good price movement. What do you mean by good price movements? I don't. Yeah, I don't. So good, decent price movement. Those are words. Those are description moves. But yeah, but what does good mean? I don't know what good price movement means. So those words don't really. We can't really have them. If we were looking at this as a trading plan, we can't really have good or decent because those words don't actually mean anything in a chart. So you can say, so if an elephant candle, you can say a high momentum candle. So we have definitions for that, yeah. So you can say a high momentum candle, yeah. So if good equals a high momentum candle, I don't. Good and decent wouldn't really make sense. I guess what are you trying to achieve? Like, what are you trying to get the answer to? Maybe that's a better way to phrase it. What are you trying to look for when you use the words good or decent? Like, what are you trying to solve? Like, what's the answer that you're questioning? The question that you're answering? I don't know. You guys getting a long session here on YouTube and TradingView. Do me a favor. If you like these long sessions, hit that like button. There's only 7 likes. Come on. There's more than 7 people in here. Hit that like button. Show me some love. That is the only payment that I request, that I demand. I demand you hit that like button. As soon as I demanded it, everyone started hitting the dislike button. Well, I was going to hit it. I was going to hit it, Akil, until you demanded. I don't like your tone. But yeah, let me know what you're trying to achieve. I don't know what you're trying to achieve by the word good or decent. I was just saying price is at a decision point, correct? If the false breakout doesn't happen, then it's a good move to the upside. If it happens, then it's a good move to the downside. I wouldn't use good I wouldn't use good move to the upside or good move to the downside. I would say if price action holds, then the prediction is that we're likely to retest the upside. If price violates, then the prediction is that we're likely to continue to the downside. So good, bad move, those don't really play a role. I would just say then you would predict. If this, then I predict that. If that, then I predict this. That's a better way of doing it. By decent, I mean overall price movement, but I have to just word it differently. I'm referring to the same thing. We just got to understand, like, what does, you can say a good chance that there's a good chance that we move to the upside or a good chance that we move to the downside. That would work. But just when you say like good or decent move, yeah, we don't actually know what you mean. So just say like a good chance we can go to the upside or a good chance we can go to the downside. So, Brian says, can we do a markup on gold? I can't. Unfortunately, we only look at one trading opportunity here on the live stream, Brian. However, if you want to hop on the Tier 1 trading platform, there's a risk-free trial membership. You can spend the entire live session with us 3 times a week, both London and New York. You can come in and get the full show. We do some pretty cool things instead of just the teaser, the full meal instead of just the appetizer. www.tier1trading.com. Come on over, Brian. Love to have you. All right, so let's kind of figure out where we left off at, talking about this trading opportunity before this comes an hour-long video or hour-long session on the first pair here. So we've retested. You can see we're at a previous level of structure, right? This is where you need to refer to your trading plan, all right? If you are a pullback trader, this is your pullback. Obviously, we are in the kill zone. We are at the lower regions of our kill zone, and now you need to start asking yourself, and by asking yourself, I mean refer to your trade plan, what do you need for your entry, right? Is it as simple as super aggressive and you just have a buy limit order there? Do you need any confirmations from an indicator, right? Do you need your moving averages to do a certain thing? You probably have to wait a little bit for that. Does the RSI have to be oversold or overbought, right? You look down at our RSI, we did go oversold. If you're using stochastics, does there need to be a stochastics cross? Does the MACD need to be on a certain level, right? Whatever your indicator, if you're using an indicator, whatever that indicator is there something that is required on there for your entry? Now, after that fact, then do you need any type of price action pattern, right? We talked yesterday about 3-bar reversals. Do you need a 3-bar reversal? Do you need a higher high, higher close? Is your entry reason a double bottom? Is it a 26.18? So whatever it is you need at this point in time, you should be dialed in, because we've come down, we've tested, even though we have this little sneaky area, which you got to pay attention to for stops. And we'll dial back to the first question about ATR stops. We've come down to previous structure. We're in that level. The market it gave us a doji candle. What does a doji candle mean? Who can tell me? These are clues. We had 1, 2, 3, 4, 5, 6, 7, 1, 2, 3, 4, 5, 6, 7. 7 bear candles in a row, followed by a doji candle. Indecision, a stall in the market. Sellers pushing down, getting rejected. Buyers pushing up, getting rejected. Closing in the middle. A stalemate, which tells us there's some interest at this level in the market. A higher high, higher close here would be a positive sign for who? For whom? Bulls or bears, buyers or sellers? If the next candle, this current candle, gave us a higher high, higher close. It'd be a positive sign for bulls. Not only does that mean that they win that individual session, but they have overcome the highs and closed above the highs of the previous session. So not only have they invaded the land, but they've set up shop there as well. And for many, that could be an entry reason. If you're more conservative, right, then you wait for a potential double bottom. So price action to make that move, to come back, retest, give a secondary hold. Maybe you look for some divergence, some bullish divergence on the RSI, and then that's your entry reason. Stops need to go below, in my opinion, need to go below the sneaky low, right? Wherever your entry's at, let's just say it's right here. Stops need to go below not just these lows, but this sneaky low right here. You got to be careful for that. We talked yesterday about poor stop placement position. Don't be cheap. Market knows where rookie traders have stops at. So below that level, again, an example of using an ATR. Right now, my ATR is 11. So let's say I was taking a 1 ATR stop. I could look at this low right here. This low is going to be what? 84.48. 84.48 minus 11 is going to be 37. So 1 ATR stop would be right there. If you deem that to be safe enough, you can put it there. If not, you can expand it if your rules allow so. And then, of course, you go back to your target projection, right? If your target projection is right here, this kind of left shoulder, probably not a trade you can take. Bad risk reward. If your target is a retest of the head here, maybe a trade you can take depending on where you get involved. If your target is a continuation higher to whatever that number is we drew earlier, I forgot what it was, but it was up here somewhere. Now you've got a positive risk reward depending on your rules. So after you've mapped out kind of what you need to trade, you need to map out that risk reward and make sure that part of your trading plan is checked as well. And many times you're going to get a good trade setup, you're going to get a good entry, but the risk reward won't work. And if that happens, guess what? You can't take the trade. So everything has to work. And this is why, we ended yesterday's conversation here in the live room talking about quality versus quantity of trades. Like, how usually newer traders just want to trade as much as they can. More experienced traders are really more like a sniper sitting back waiting for the opportunity. I think something that you'll notice as your trading career evolves is that, one, it's very hard to find good trading opportunities, and two, grade A trading opportunities don't happen too often. Grade A trading opportunities that you can take. So one, there aren't a lot of grade A trading opportunities out there to begin with, right? Two, a high percentage of your grade A opportunities or your potential grade A opportunities probably aren't takeable. Something's going to happen. Either everything's going to be lined up and the market never gives you an entry reason, everything's going to be lined up and the risk reward doesn't meet your profile, right? That is the reality of trading. And as a experienced trader, as a disciplined trader, you've got to be able to be like, ooh, this is a great opportunity, but it doesn't meet my rules, so I've got to sit on my hand and let you go. And that's extremely hard. However, necessary. It's even worse, like Bobby says, yeah, when you make a prediction and it moves and you can't be involved in the trade and you're sitting back like, dude, like I told you that would happen. Like I told you that would happen. Why didn't I make money? And then resist that urge to revenge trade and buy something else up because you feel like you missed out. So that's the difficult part of trading, but the necessary part if you want to be consistently profitable. So that's it for the trade of the day. Sammy says, would you class this? Hey, Sammy. Would you class that hidden divergence for the RSI? I would not, because the low here is actually lower than our first low. So if our pullback here was higher, then yes, we would have hidden divergence. But because this low is actually lower, than our previous low, I can't class it as hidden divergence. Good question. That would be another. That would be a really good positive sign. I didn't mention the structure swap either, or not the structure swap, the RSI swap. Sorry about that, guys. The move directly from overboughtness to oversoldness. Something I really enjoy in my trading. You can see RSI oversold, going from overbought. That paired with hidden divergence. I love that. But unfortunately, you don't quite get it technically. But very, very, very good question. All right, YouTubers, trading viewers, thank you for joining. Good questions today. Again, hit that like button on your way out. If you have any questions or comments, leave it below. I will see you guys this weekend with a Trading Edge video. Make sure you check it out. Make sure you subscribe to the channel if you're not already. That way you don't miss these live streams. We're doing them every Tuesday, Wednesday, and Thursday. Live room members, do you have any more questions on this trade? If so, let me know. If not, let me know where you would like to go to next. My radar is a little bit thin here. Euro dollars on it, and that's about it. Live streamers also, don't forget to check out the link underneath wherever you're watching this at. Sign up for that event. Do it right away. Trust me, that way you can